Welcome to our video on the crucial topic of tax timing and its significance in optimizing your tax strategies. In today's fast-paced financial landscape, understanding when to take action can make a world of difference in your tax outcomes. We'll dive into the key tax deadlines you need to be aware of, from filing dates to payment schedules, ensuring you never miss an opportunity to maximize your savings. Throughout this video, we'll explore various strategies that can help you time your tax decisions effectively. Whether it's knowing when to make contributions to your retirement accounts or understanding the implications of capital gains, mastering tax timing can lead to substantial financial benefits. We aim to keep this discussion engaging and informative, breaking down complex concepts into easy-to-understand insights. By the end of this video, you'll not only grasp the importance of tax timing, but also feel empowered to implement these strategies in your own financial planning. So, if you're ready to take control of your tax situation and unlock potential savings, stick around as we guide you through the essential elements of tax timing. Let's get started on this journey to smarter tax strategies. Understanding tax timing. Tax timing refers to the strategic decision-making process regarding when to execute financial transactions that affect your tax liabilities. This concept is crucial in tax planning, as the timing of income recognition, deductions, and credits can significantly impact your overall tax situation. For instance, deferring income to the following tax year or accelerating deductions into the current year can lead to lower tax liabilities, ultimately affecting your financial decisions. The timing of these actions can also influence the size of your tax refunds. By carefully planning when to claim deductions or report income, you can optimize your tax return and potentially receive a larger refund. This proactive approach allows you to manage your cash flow more effectively and make informed decisions about your finances. Being proactive with tax deadlines is essential in this process. Missing a deadline can result in penalties, interest, or lost opportunities for deductions. By staying ahead of these dates, you can ensure that you're making the most of your tax situation. In summary, understanding tax timing is not just about compliance. It's about leveraging your financial decisions to maximize benefits and minimize liabilities. This knowledge empowers you to take control of your tax planning and achieve your financial goals. Key tax deadlines. Understanding key tax deadlines is essential for both individuals and businesses to avoid penalties and ensure compliance. For individuals, the most critical date is April 15th, which is the deadline for filing your federal income tax return. If you need more time, you can file for an extension, but remember that any taxes owed are still due by this date. For businesses, the deadlines can vary based on the type of entity, but generally, March 15th is the deadline for S corporations and partnerships, while C corporations typically have until April 15th. Missing these deadlines can lead to significant consequences, including late fees, interest on unpaid taxes, and even audits. For individuals, failing to file can result in a failure to file penalty, which can add up quickly. For businesses, missing deadlines can affect cash flow and lead to compliance issues. To keep track of these important dates effectively, consider using a digital calendar with reminders set well in advance. You can also utilize tax software that alerts you to upcoming deadlines. Additionally, maintaining a checklist of key dates can help ensure you stay organized throughout the tax season. By being proactive and informed, you can navigate tax deadlines with confidence and avoid unnecessary stress. Strategies for effective tax timing. Optimizing tax timing can lead to better financial outcomes, and there are several strategies you can employ to achieve this. One effective method is deferring income, which involves postponing the receipt of income to a later tax year. This can be particularly beneficial if you anticipate being in a lower tax bracket in the future. Conversely, you can accelerate deductions by making expenses or contributions before the end of the tax year, allowing you to reduce your taxable income sooner. Timing charitable contributions is another powerful strategy. By making donations before the year ends, you can claim the deduction on your current tax return, which can significantly lower your tax liability. Additionally, if you're considering a large donation, you might want to spread it over multiple years to maximize the tax benefits while staying within the limits of your budget. Finally, leveraging tax credits and deductions strategically can enhance your tax timing efforts. For instance, if you know you'll qualify for certain credits, plan your expenses accordingly to ensure you maximize these benefits. By understanding and implementing these strategies, you can take control of your tax situation, optimize your financial outcomes, and ultimately keep more of your hard-earned money. Common mistakes to avoid. When it comes to tax timing, individuals often fall into several common pitfalls that can lead to unnecessary stress and financial repercussions. One frequent error is missing tax deadlines, which can result in penalties and interest on unpaid taxes. Many people underestimate the importance of these dates, so it's crucial to mark them on your calendar and set reminders well in advance to avoid last-minute rushes. Another common mistake is inadequate record keeping. Failing to maintain accurate and organized records can complicate your tax situation and lead to missed deductions or credits. Keeping track of receipts, invoices, and other financial documents throughout the year can save you time and headaches during tax season. Consider using digital tools or apps to streamline this process and ensure you have everything you need when it's time to file. Lastly, don't hesitate to seek professional help when needed. Tax laws can be complex, and a tax professional can provide valuable insights and guidance tailored to your specific situation. Whether you're unsure about deductions, credits, or filing requirements, consulting with an expert can help you avoid costly mistakes and optimize your tax timing strategies. By being aware of these common pitfalls, you can navigate tax season with confidence and ease. In conclusion, understanding tax timing is essential for optimizing your financial health. We've discussed how strategic timing can significantly impact your tax liabilities, refunds, and overall financial planning. By being proactive about key tax deadlines and implementing effective strategies, such as deferring income or accelerating deductions, you can take control of your tax situation and maximize your savings. We also highlighted the importance of accurate record keeping and avoiding common pitfalls, such as missing deadlines or neglecting to seek professional help when necessary. These actionable strategies can empower you to navigate tax season with confidence and ease, ensuring you make the most of your financial opportunities. If you found this video helpful, we encourage you to subscribe to our channel for more valuable tax tips and insights. Don't forget to like this video and share it with friends or family who might benefit from understanding tax timing better. Your engagement helps us create more content that can assist you in achieving your financial goals. Thank you for watching, and remember, mastering tax timing is a key step towards securing your financial future.